Welcome to TradeTheMBI.com. This is John. This report is for the 4th, and well, we can see that we started going up through here, and then unfortunately our steel crossed, and then it also crossed both orange and cyan at the same time, and that started to lead to some selling. Though it was bought back, it still expresses more weakness than it does strength. Plus the shakeout turned from positive to rolling over, so a little bit more fill back into this. Looks to be a little mini range that's developing right here. Let's look at the ABMs on this. Now, it's interesting because you're getting a double reset from the traditional one. This is the old version, not the updated one. But I think what we really are more keen to is what ends up happening here on the extreme, because if we just stay right at this mid-range at the -50 and not go into the oversold, the likelihood of a strong turnaround is much greater. And certainly with the shakeout completely reset now, it's just a matter of building momentum. And I think that's going to take some kind of success, either indication that there's a turnaround in the healthcare or stimulus or even tax cut. Otherwise, we're just kind of we've sort of been in malaise ever since that started, that whole topic, and it's just sort of kept us flat and unmoving, really. And it's going to create some intraday range, but I don't see much spectacular as far as doing anything unique. Nasdaq is still performing well. Overall, Euro is just, likewise. I mean, I think we're all sort of in a holding pattern malaise. Now, it's interesting because at this particular point, we should expect some fund money to start coming in, and that could give us a little bit more range to play with, because if they see dips, I think that you're probably going to see them buying them, and that could create some nice turnaround wave action for intraday trading. Bonds, again, you see everyone's flocking to that flight to safety. And despite the ridiculous nature of the yield that's coming through there, oil, there was the talk of all the tight production, but the reality is it doesn't make any difference how much they reduce. U.S. shale, and that can just fill in that demand. As soon as price starts to peak, their flow is just going to go. And it creates a very unstable oil situation, in my view, from that standpoint, which is helpful for the customer, also for maintaining low inflation. That's not going to change what's going to be driving gold, because that's, again, it's not a myth of inflation, it's just the way that they count it nowadays is a little arbitrary. But we're still not seeing a major press in bottlenecking, is what I would call it, for the economy that is creating and or driving prices higher. In fact, you hear them talking about record decreases for auto car sale price tags for used cars, and a variety of other things that are actually deflationary rather than inflationary. And we're certainly not seeing the labor market squeeze. There's been plenty of slack, as they like to refer to people as, slack. That's what they are when it comes to the ability to hire more people and still not have it. I mean, theoretically, they're going to say the unemployment rate is going to be down to like 1%, and yet you're still going to be adding hundreds of thousands of jobs, which is just will show how ludicrous the whole concept of how they keep track. But it's been kind of an interesting one. Let me squeeze this chart just a fraction here, because we can see what happened. We were talking about this little move right here, and I warned that as soon as the cyan and or steel crossed the orange, that we would probably begin to see weakness, and usually that begins with a also trail off in the shakeout, and you can catch it early, or it's just what it was an indication that with the dip below the extreme red line here, that any pop was likely going to hit a resistance. In this case, it was the 38% line, and then it starts to trail off from there. Now, I typically look for, in this case, rising brown or azure is usually what you look for when that happens, and that lets you know that, no, that's going to be a continuation to the upside and not fail going through there. But then we ended up with a nice dip. You see the reset of the new version of the ABM right at this particular point that rose all the way to the 50%. Came back a little bit, so it's interesting. If you just redid the bars to 15 or 10 bars, this would become the new high, this would be the low, and you would get a 50% retrace right there, which led to the next wave up, which would produce, brand new highs, or what you would probably call over 100% breakout. But in this case, all it did was return back to the previous high range that failed, that led to the little wave down below. So they have their midpoint, sell off, accumulate, bring it right back to the same spot. Same situation is happening. We reached the peaks, new highs right there, 50% coming through. Do we have the buy signal? Almost, not quite, because we're still maintaining the orange here. So at this particular point, not a buy just yet. Working through that, we need to see that orange come down, even though you've got the green crossover and rising steel. That's just adding a little bit of support, but we know that without that orange dip below, it's just going to be more of a malaise kind of back and forth. And that is the gist of things at this particular point. Certainly earnings season, and that is going to start to chime in. It's going to have an impact, but the reality of most things right now is that it appears the market is factoring in some degree of inflation for the latter half of the year, as they believe things are going to start to perk up a little bit. Certainly it doesn't look like tax reform and those things are going to be happening anytime as soon as they thought. So I think that puts a bit of a damper on the potentiality of things. It still doesn't change my 2,500. Would still be reasonable within that range, but that doesn't mean that we're going to get there super lickety split, because they just couldn't agree on the right things. If they do get an agreement on the healthcare, that could happen quickly. Will it? Yeah, doesn't appear to be a foregone conclusion at this point. So the market will let us know, because we will see the rise beforehand as the people in the know learn from their senators that they contribute to, whatever, that something is close, and that's what's going to drive price. So that's why we just keep an eye out. Our readings will let us know where we're at. As always, though, trade well. We'll talk to you later.